Altcoins unleashed, Ethereum, XRP, and Dogecoin rally to new heights.
Altcoins unleashed, Ethereum, XRP, and Dogecoin spark a rally as crypto surpasses $4 trillion.
In summary,
the prices of Ethereum, Dogecoin, and XRP are on the rise, with most technical indicators signaling a bullish trend for each cryptocurrency. The recent surge in altcoins has propelled the overall cryptocurrency market to exceed a remarkable $4 trillion.
What lies ahead for altcoins? Let's explore the insights from the charts.
For cryptocurrency traders, this past week has been particularly rewarding for those invested in XRP, Ethereum, and Dogecoin. While many cryptocurrencies have seen gains, these three have notably distinguished themselves, especially in light of Bitcoin's relatively subdued performance over the last week.
What's happening and what do the charts indicate for XRP, ETH, and Doge?
The cryptocurrency market is witnessing one of its most significant rallies since 2021, with the total market capitalization soaring above $4 trillion for only the second time in history, following a brief encounter with this milestone just last week. This surge coincides with Bitcoin breaking its previous all-time high, reaching an impressive $122,838 on July 14, which has fueled a strong bullish sentiment among long-term crypto enthusiasts.
The broader economic landscape is also looking promising for investors.
The S&P 500 index is hovering around the 6,000-point mark, while oil prices remain relatively stable at approximately $76 per barrel, despite ongoing tensions in the Middle East. More crucially, the recent enactment of the Genius Act, which establishes a regulatory framework for stablecoins in the United States, is viewed as a significant advancement for institutional investors who have long sought regulatory clarity. This confluence of favorable conditions has sparked a new alt season, with its dedicated index climbing to 59 points, just shy of the yearly high recorded on January 30. Ethereum, ETH, the reigning champion of altcoins, returns. Ethereum has emerged as the standout performer among major cryptocurrencies, achieving an impressive 25.7% increase over the past week, reaching $3,843 before settling around $3,769. This remarkable rise appears to be supported by substantial institutional investment, with spot ETH ETFs attracting $2.2 billion in weekly inflows. On Myriad on Linea, a prediction market developed by Decrypt's parent company Dostan on the Ethereum Layer 2 network, users are not overly optimistic in the short term. They estimate only a 40% chance that Ethereum will surpass the psychological barrier of $4,000 per coin by July 25. Conversely, traders on Myriad are more confident, assigning a 63% probability that Ethereum will achieve a new all-time high, above $4,891, before the year concludes. The technical indicators for Ethereum are intriguing. The Relative Strength Index, RSI, currently sits at a scorching 70, indicating strong bullish momentum.
To visualize this, think of the RSI as a speedometer for price momentum. When it's this elevated, it signifies that buyers are aggressively pushing prices higher.
Although RSI readings above 70 typically suggest overbought conditions that may concern day traders, in the context of a significant breakout, this actually confirms authentic buying pressure rather than mere speculation. Given these high readings, traders might want to establish stop-loss levels near current prices to mitigate potential mass liquidations while still maintaining exposure to possible bullish momentum, as most indicators suggest a positive outlook for the coin. The average directional index, ADX, currently at 22, is nearing the critical 25 threshold.
The ADX measures the strength of a trend, regardless of its direction. An ADX below 20 indicates a lack of a clear trend, while readings above 25 confirm a strong directional movement is underway. For Ethereum, this suggests we are on the brink of a sustained rally rather than a fleeting spike. It's also worth noting that the trend may not be robust enough to prevent a minor correction, which could occur without derailing the overall bullish trajectory. Most importantly, Ethereum's price action in relation to its exponential moving averages, EMAs, tells a positive story. Currently, ETH is trading well above both the 50-day EMA, $2,888, and the 200-day EMA. The widening gap between these averages, known as moving average divergence, often precedes multi-month trending movements. When short-term averages diverge from long-term ones, it's akin to a rubber band stretching before a powerful snap upward.
The squeeze momentum indicator, which assesses whether markets are in periods of contraction before significant movements, has also signaled bullish, indicating that after a phase of consolidation, volatility is expanding in favor of the bulls.
Key levels asterisk.
Asterisk immediate support, $3,417, Fibonacci 23.6% retracement.
Asterisk strong support, $2,888, 50-day EMA. Asterisk immediate resistance, $4,103, visible on chart. Asterisk strong resistance, $4,282, 127.2% Fibonacci extension. Hashtag XRP, the resurgence of the bank coin. XRP has experienced a remarkable 20.9% weekly increase, reaching $3.52, marking a significant turnaround for a cryptocurrency that has been ensnared in regulatory challenges since 2018. The token has finally surpassed its previous all-time high of $3.40, entering a genuine price discovery phase for the first time in 7 years. The technical setup for XRP is captivating.
The weekly charts depict a scenario that seems almost surreal for a serious investment, flat for years, followed by a sudden parabolic surge. But this is the nature of the cryptocurrency market. The RSI at 71 on the weekly chart is right at the overbought threshold, but context is essential. After years of stagnant movement, such readings may signify the onset of a new trend rather than its conclusion. It's akin to a coiled spring finally releasing. While the initial surge may appear extreme, it is backed by years of pent-up energy.
The ADX reading of May 20 seemed low compared to other indicators, but for XRP, this is understandable.
After such a prolonged period of sideways trading, trend strength indicators naturally reset to lower levels, making it challenging to overcome what has been the norm for over 5 years. The fact that it is climbing toward 25 suggests that a new trend is beginning to take shape.
XRP's moving average configuration provides the most bullish signal.
The 50-week EMA is significantly below current levels, and the gap to the 200-week EMA continues to widen. On weekly timeframes, this expanding differential typically precedes multi-month trending movements, reflecting sustained accumulation by long-term holders rather than short-term speculation.
Key levels asterisk.
Asterisk immediate support, $2.93, previous resistance turned support. Asterisk strong support, $2.47.
Asterisk immediate resistance, $3.68, recent high.
Asterisk strong resistance, $4.40, Fibonacci extension targets, potential natural targets that could emerge during price trends. Hashtag Dogecoin, Doge the meme coin's comeback. Dogecoin has surged by 33.5% this week to $0.274, making it the top performing meme coin among the top 100 cryptocurrencies, following Floki. This meme coin is undergoing a significant transformation, underscored by Nasdaq-listed BitOrigin's announcement of a $500 million Doge treasury strategy, which includes an initial purchase of $40.5 million already completed.
The technical indicators for Doge are also reflecting bullish momentum.
The RSI at 61 indicates strong buying pressure without being overextended. It's in what traders refer to as the sweet spot, where trends can sustain for extended periods. The ADX at 16 suggests that the bullish spike is relatively weak, but it's important to remember that Doge has been in a prolonged downtrend.
Low ADX readings following a strong move often indicate a period of consolidation before the next upward leg.
If you're trading Doge, it may be wise to keep an eye on this indicator in the coming days for more precise readings. What's particularly noteworthy is the squeeze momentum indicator showing an on status, indicating that volatility is compressed and poised to expand. This may suggest that bulls could struggle to maintain momentum after hitting a price resistance, but with Doge successfully breaking past a double bottom, a typically bullish pattern where prices bounce twice at a resistance level, forming a W shape, conventional wisdom suggests it should continue its upward trajectory for at least a few more weeks. The 50-day EMA around 20 cents now serves as immediate support, while the 200-day EMA provides a floor near 15 cents. The fact that Doge is trading above both with an expanding distance between them confirms a bullish market structure.
Key levels asterisk. Asterisk immediate support, 21 cents, psychological level and short-term EMA zone.
Asterisk immediate resistance, 28 to 30 cents, 2025 highs.
Disclaimer.
The opinions expressed by the author are intended solely for informational purposes and do not constitute financial, investment, or other forms of advice.
Daily Debrief Newsletter.
Start your day with the latest top news stories, along with original features, podcasts, videos, and more.
Crypto weekends on a high note. What's next for regulation and adoption?
Brace yourself for a major turning point in crypto history. The much-hyped Crypto Week has wrapped up with an unexpected bang, leaving the industry both celebratory and cautious.
Why cautious?
Because, as many experts argue, the real work is only beginning, and here's where it gets controversial. By week's end, we saw the passage of the long-awaited Guiding and Establishing National Innovation for U.S. Stablecoins, GENIUS, Act, described by multiple insiders as a tangible step toward regulatory clarity for cryptocurrencies.
Yet some people worry that policy alone might not be enough to bring blockchain technology into everyone's daily life.
It's great to have clarity, but that's just the foundation, said Leo Fan, co-founder of CISIC, in an interview with Cointelegraph. He emphasized the need for scalable blockchains. Cointelegraph.com/learn/articles/how-does-blockchain-work-everything-there-is-to-know, near-instant verification systems, and more robust custody solutions if cryptocurrencies are truly going to serve as integrated infrastructure for mainstream finance and beyond. Clarity is just a starting point, Fan repeated, and he believes much of the real potential, tokenized financial services, more transparent identity systems, and built-in privacy protections, has yet to be unleashed.
During Crypto Week, the GENIUS Act made headlines by formally acknowledging that not all digital assets should be automatically classified as securities.
Fan called this a foundational shift and a green light for developers, investors, and institutions, indicating that broader innovation could now move forward with fewer legal gray areas. Crypto is finally being recognized as real infrastructure, Fan added, suggesting that the next step is to apply blockchain technology in deeper, more practical ways, such as identity management and privacy solutions in everyday life. Opinions on the GENIUS Act's impact vary, but most see it as a boost for DeFi. For Alton Tudor, co-founder and CEO of More Markets, the recent legislation proves that DeFi is here to stay. Tudor pointed out that the United States is now steadily closing what used to be a hefty gap with Asia in the race toward broad crypto adoption. Cointelegraph.com/news/Asia's-tokenization-leadership-global-investors. He also noted that stablecoin usage could grow in a meaningful way as traditional assets, think gold, oil, or even real estate, become tokenized, thereby extending DeFi's reach. But here's the part most people miss. Tudor worries that the benefits of regulatory clarity might skew toward institutional players. There's a risk that this progress only helps big players and not everyday investors, he warned. He compared the situation to the early internet era, cautioning that a narrow institutional focus could result in crypto's own .com bubble. In his view, the crypto community must keep building user-friendly payment systems, applications, and ways for retail investors to earn or stake their holdings.
Offering another angle, Ryan Chow, CEO of Solve Protocol, said that years of confusion may finally be giving way to a stable environment in which larger institutions can participate. He praised the GENIUS Act's clarity as monumental, specifically highlighting the clear legal boundary it draws between digital assets and traditional securities. Clarity is necessary, but credibility is what builds markets, Chow argued. He foresees innovations such as Bitcoin-backed credit, tokenized government treasuries, and yield-earning assets tied to real-world value all thriving in a regulated yet transparent ecosystem. In his words, stable and trustworthy infrastructure is the bridge between vision and reality. Yet critics ask, is regulation alone enough? Will Kay, CEO of VOI and co-founder of Symbiosis Finance, said it's time to face the truth. Having laws on the books doesn't automatically translate to mass adoption. The crypto industry still needs to deliver simpler user experiences and significantly mature its overall technological stack. The industry needs to stop building for crypto natives and start building for everyone else, he explained. Until mainstream users can confidently navigate crypto apps and services without specialized knowledge, it could remain a niche market, a small pond rather than the global, interconnected economy many people envision. A closer look at the legislative breakthrough. Passed last week with more than 300 votes in the House, including support from 102 Democrats, Cointelegraph.com/news/genius-act-heads-Donald-Trump-signing-what-will-change,
the Genius Act provides the first qualified federal framework for stablecoins.
It's no exaggeration to say this sets the groundwork for a new phase in crypto's U.S. evolution. Observers are calling it a major milestone in turning decentralized finance from a fringe experiment into a legitimate sector. Whichever path the technology takes, though, industry leaders agree that one bill doesn't solve every challenge ahead. Now here's where the real debates begin. Are we entering a golden age of crypto, or will the pursuit of proper infrastructure bog down innovative projects in red tape? Will additional government oversight nurture public trust or dampen the community-driven spirit that gave rise to blockchain in the first place? And if stablecoins become a widespread standard, is there a risk that retail investors could be left behind? Your thoughts matter. What do you think about these questions or any other part of this enormous shift in crypto regulation? Is the Genius Act the spark that will light the fuse for mass adoption, or are we only seeing the tip of a very large iceberg? Do you side with those cheering the new level of clarity or the skeptics who worry about too much institutional favoritism? Join the conversation and let us know if you believe these changes will benefit everyone or if there's a hidden cost. After all, regulatory laws are only one piece of the puzzle, and the broader crypto landscape still depends on technological advances, seamless user experiences, and openly debated perspectives. For more background on how established financial industries are building on Ethereum, see the story at cointelegraph.com/magazine/tradfi-building-ethereum-L2s-tokenized-trillions-RWAS-inside-story.